So just a note from me, my name is Melissa Solomani. I'm the business advisor for Stoke-on-Trent and Staffordshire Growth Hub. I'm joined by Rebecca Parker, who is also a business advisor at the Growth Hub and manages the business helpline. So today, this webinar is going to be on successfully funding your business, and it's kindly being hosted by Tony, Andy and Patrick. So Andy is from the FSE, Tony and Patrick are from Smorgasbord. So they'll be telling you all about the funding options available to you. So for those of you that don't know the Growth Hub or don't know really what we do, we were set up by Stoke-on-Trent and Staffordshire Local Enterprise Partnership. So we aid and support business growth, so businesses within Staffordshire. So Becky will touch a little bit more on that later. So that's everything from me. I'll pass it over to Tony. Thank you.
Thanks very much, Melissa. First of all, a big thanks to Melissa and Becky for hosting this for us, and for all of you for joining in. Just a little bit of housekeeping from our side. I have sent a copy of the slides to Melissa, and they will be being sent out to all of you that have registered. So you don't need to take any extensive notes, etc. So we will be sending you the slides. And as you see on our slides, we've got our details there, and Andy has a slide with his contact details on as well. So if you don't take them down from the chat box, you will still have them on the slides. So again, just to point out what we're going to cover today, a lot of the slides have got a lot of detail on them, which we're not going to go into exhaustively. They're really more for your reference to read later. So, all this thing about not having wordy slides is great, but sometimes you do need that detail if you're looking at funding options. So we're going to very briefly cover the main funding options available from the government schemes that have been brought in because of the pandemic, and a couple that have already existed before. What happens if you slip through the net or fall through between the cracks and you weren't eligible for those schemes, or you were rejected, or you just couldn't raise enough money from those? And then we're going to talk about planning around funding as well, and how to operate planning for your business. Andy's going to cover alternative finance and market cap funders and working capital management. And then we'll all chip in at the end on what might the future funding landscape look like after lockdowns restricted. So to me, the key thing to take away from this webinar today is nothing around the titles. It's about the business plan. Patrick's going to cover it in more detail. Andy will mention it. But to me, if you want to know how the business is going and where it's going, you need to have that plan. So if we go back to fundamentals, again, a lot of these cliches because they're true, but cash, you need cash to generate some interest to get your customers, whether that's marketing, social media, or whatever, or opening up your shop front or opening up your market stall. You often need cash to do that. And once you've got the customers, you want to try and get cash from them to keep fueling the rest of the business. So it is a bit of a cycle. Patrick and I did a lot of research into the barriers to growth for SMEs, which is why our title was the #1 barrier. And this is the thing we found was the most difficult for a lot of SMEs, was actually getting access to finance, to put it bluntly. So in your planning, we have what we call known knowns. So we should know by looking at our mobile banking or our online banking, how much cash have we actually got in the bank right at this second? How much is under the table in the petty cash tin or whatever? Then we need to know what are we expecting to come in, and that should be already written down. We should have invoices we've sent out, we're waiting to be paid. We should have all these things in our plan, knowing when they're going to be coming in. And we should also know what cash is going out. Again, whether you're using an accounting system, spreadsheets, whatever. We're actually Xero and QuickBooks specialists, and both of those systems have got very good analysis in there to see all these things. And with obviously trying to get the cash coming in, we want to maximize it. Cash going out, we want to minimize it, delay it wherever possible. And then what government and other funding schemes could we take advantage of if we need more cash? With the known unknowns, so to speak, might be a strange phrase, but we can do some planning, but it's never going to be perfect, but around what we think is the best case, what's the worst case, and then what's the middle case. None of them will be right, but if we do the planning and then keep monitoring, we should be able to keep relatively on track. So the good, the bad, and the ugly, we've referred to it as, or someone else did in another webinar. Great old film. But what's the best case, worst case, and middle? So I gave an example in the last time of, say you're running a pub or a restaurant. In April, May, your worst case would be we never open again. This pandemic goes on for years and we have to shut up shop. Your best case may be, let's hope it all opens up next week. And the middle case is probably somewhere in between those two. Then come end of June, when we knew pubs were going to open on the 4th of July, your planning would look very different. Your best case would be, well, likely they may lift everything within a few weeks. Middle case is, well, we'll be going at 40, 50, 60% occupancy. And the worst case is there may be a second wave and it will be shut down again. Again, it's important that we keep reviewing it on a very regular basis. With the unknown unknowns, it's very easy to say, but not so easy to do, is just try and forget about them, because you can't control any of them and it's impossible to plan, and you'll do yourself a disservice and probably go crazy worrying about how long this will go on for, what if they don't find a vaccine, all that sort of stuff. So do the known unknowns, plan around them, and often you'll find you can relax a lot more, because by having written it down or expressed it in some way, we find a sort of a weight taken off our shoulders. So get the quick wins, reforecast, refresh, and review again. So, if you're in the pub business or the restaurant business, again, you might be only doing this every few weeks. But if you're in somewhere like Bolton or Leicester, you might have to do this on an almost weekly basis, as they've had lockdown measures imposed and social distancing. The government's come out with a rule last night that we're now limited to being 6 people rather than 30 people. So these things are changing on a regular basis. But go for those quick wins, redo your plan, refresh it, and then review it regularly. Now, this is a little grid showing, this came from a government website actually, showing the options that were available with the government funding under COVID. So confusing it looks on that grid, but it was actually a lot more straightforward than they made out. So the funding options available to us with government backing were the Coronavirus Business Interruption Loan Scheme, known as CBILS, the Bounce Back Loan, which was known as BIBLS, Self-Employed Income Support Scheme, or SEISS, and the Furlough Scheme, or the Job Retention Scheme. The Startup Loan Scheme is a government scheme, but it's been around long before lockdown and COVID. Midlands Engine Investment Funds is something Andy's going to talk about in detail. And the Future Fund is something I will mention only because we were asked to by a couple of the growth hubs where they've had poor take-up of that. So I've just got one slide on that. If you couldn't get any of those, there are things like R&D tax credits I'm going to mention. The government gave everyone a business rates holiday for the current year. We were able to defer things like VAT, income tax, corporation tax. There were protections in place to protect you from being evicted if you hadn't paid your rent, or some landlords got very, very hard-nosed and just said pay or get out. The good thing is the courts are so log-jammed, there's very little chance they will be able to do any of that. Local authority grants, there was a number of different grant schemes. The current discretionary one is still going in a number of authorities, so just Google your local authority and put discretionary grants in. So some of the councils I've dealt with, and I helped them to put these schemes together, they just did a first come, first served basis, and they've used up all their money. Others did it on a, let's look at every application individually, rank them and give them their own merits and then decide. And then there's lots of other schemes I'll mention later, like asset finance, invoice finance, and merchant cash advances. So I'm not going to give you an ins and outs of these different schemes, but I just want to bring them up to date, so to speak. Now, the CBILS loans was the first one that came in and was for the sort of larger amounts generally. The important thing is the bit in red there, that it closes at the end of this month. Now, as I understand it, as long as your application is in before the 30th or on the 30th, you'll be okay. It doesn't have to be completed by then, it's just get it in. Again, we have no idea whether this is going to be extended or not. There's all sorts of rumours. We've asked the British Business Bank, they won't tell us, quite unsurprisingly. But we've got to assume it will stop unless we hear otherwise. So just an update at the bottom. As of last week, they lent nearly 14 billion to 60,000 businesses out of 123,000 applicants. So they're running at less than 50%. But the other change in there that's quite important is that when it first came out, you had to provide an awful lot of documentation, particularly around forward planning. And there was a weird clause that said, were you a business in difficulty at the 31st December 2019? Now, I won't go into it, but it was a very strange clause under EU law, and an awful lot of small SMEs did fall foul of it because it was a very strange definition. And the good news is about 3 or 4 weeks ago, they decided to do away with that and remove that question altogether. So this has now opened up the scheme again. So a lot of people who were rejected, you can now go back. Some of the banks are really being decent and they're going back and actually contacting the clients themselves. I know I do a lot of work with Metro and they have gone back to every application. The ones they rejected on this basis, they've got back in touch with them. So the other thing, if you already had a bounce back loan but you still want a CBILS loan, you could pay that bounce back loan back. It's interest free for the first 12 months. The bounce back loan itself was a godsend to SMEs, the easiest funding option probably ever presented to a business. 7 basic questions on an online system. I applied for mine through Starling Bank. I got online at 10:45 and the money was in my account before 4 o'clock. So pretty impressive stuff. This one is open longer because it started later. So you've got until the 4th of November. If we look at the numbers, we can see 3 times the amount of money lent to a massive number of businesses, almost 1.2 million businesses out of 1.4 applications. So running at sort of 80–85% acceptance because it is so easy. And again, there's still plenty of money left in the coffers. So if you've been thinking about it, you know, if in doubt, I would say go for it. I don't like to encourage debt unnecessarily. But the good thing is this, is for the first 12 months, it is interest free and it is repayment free. So you could literally sit on it for 12 months and then pay it back and it wouldn't have cost you a penny. So if you want that sort of comfort blanket, I would suggest going for this, but only if you think you might need it. I'm only going to mention these 2 schemes because, again, they've changed recently. The self-employed income support scheme was in 2 tranches. The second tranche went live in the middle of last month. If you click on that link there, there's details. But again, it was cut from 80% to 70% of average trading profits. So, you know, and again, we have no knowledge of whether they're going to bring a 3rd tranche in or not. But as this was brought in as a result of the job retention scheme being announced and all these self-employed people saying, well, this is not fair, we assume whatever they do with the furlough scheme, they will do with SEIS. Now, the furlough scheme, again, we have no indication it's going to continue after the end of October. But what's been happening this last month, this month, and next month is it's slowly being tapered off. So we went from 80% down to 70%, and we're going down to 60% next month. And the employer is also having to pay pension costs, employers' NI, etc. So unfortunately, if this scheme doesn't move past the end of October, there are going to be an awful lot of people out of work because the employers won't be able to afford to pay these furlough payments. The Future Fund was a very niche fund. As you can see the numbers at the bottom, only 902 people applied for it as of last week and 590 got it, and 588 million when you think there was 30-odd billion lent to bounce back loans. But to those people who got it, it's obviously very worthwhile. Again, it's only open to the end of this month. Again, I've checked, as long as you get your application in. But it's so niche because it's only for people that have raised £250 million in equity in the last 5 years. There's also some idiosyncrasies with it that you can't use EIS and SEIS, which is a big no-no for investors. But it is what it is, and I was asked to mention it, so there it is. I particularly want to talk about this. Becky, I think, is going to mention it at the end, but 2 things that were announced in the last few weeks. what they've called the Kickstarter scheme, which is a grant for SMEs, somewhere between 1, 3 and 5,000, depending which part of it you read. But it's all being distributed by the local growth hubs. So they were all given an allocation of that 20 million, and that was all published. Now, interestingly, I've done a lot of work with Hertfordshire Growth Hub, and when they went live with their applications, they sold out within an hour. And we've just been talking to Lincolnshire Growth Hub, and they sold out on Monday morning in 45 minutes. So huge number of applications, so they had to turn off the tap effectively because they'd used up all their funding. But Becky will talk about that. And also there's a link there to another scheme, that a peer networking scheme. This is also being run by local growth hubs. So just to let you know, to be aware of those two. Now, if you got rejected when you applied for any of those funds, do look at your credit report. Again, another small takeaway from today. Please, 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 please go and look at your credit report. You can look online at Credit Karma or at ClearScore and get your report, but I would advise you, if you can, to look at your Experian credit report. They do charge $14.99, I think it is, a month. But if you go for the 30-day free trial, you can get that first report free. The reason I say that is nearly all of the financial institutions use the Experian system. You can get some disparities between the Equifax system that the others use and Experian. So go and look at it anyway, because if there's mistakes in there, they'll probably be in all copies of it. But just go and have a look. There's often things on there you're not aware of. The classic is the parking ticket you forgot to pay, then you moved house. And when you go look at your credit report, you'll find you have a county court judgment against your name. So do look at them. Talk to us if you want any help on how to clean up that credit report. There's some very simple things you can do. If you were rejected, go back through your application, get someone to review it. We'll happily review it with you. But just get another pair of eyes to look at it and say, does it look reasonable? Some banks will tell you why you're rejected, some won't. Do look at alternative lenders. The British Business Bank has nearly 100 of them, and you can filter them by type, such as civils, asset lending, etc. Do look at other finance types. We're going to cover and mention some of those. But please, again, do get guidance from experts. Ask Andy, ask Patrick, ask me. More importantly, ask your local growth hub. That's what they're there for. Quite a powerful statistics and work I did with Grant Thornton into high growth at SMEs, and these are SMEs, not major multinationals. 48% of those high growth companies sought advice about how to access finance, but only 2% of all the other SMEs did. So please ask for advice. It's often free of charge. If you want us to do work, that's something different, but advice, we'll often give you that first 15, 20 minute, half an hour call free of charge. If you didn't qualify, I'm afraid, although they put a select committee together to look at all this, all they did was come up with a bunch of statistics saying, isn't it all terrible? But not one real suggestion has come forward, and I haven't seen any real change in anything so far, other than they have given a bit more funding to things like the arts. So you need to look at all the other types of funding that are available if you didn't qualify, or if you couldn't get enough from those schemes. One of the things you could look at is R&D tax credits. Again, it's quite a complicated subject, so I won't go into it here. But I said, if you want to contact me offline, the last figures to the year ended April 18, the government gave out nearly 5 billion in grants, of which nearly 2.5, 2.6 or something went to SMEs. It is money for nothing, to be quite honest. It's all based on what you have already spent. And I put those pictures on the slide with sort of clean rooms and laboratories and PPE equipment. It's nothing to do with that whatsoever. Lots of our claims come through software companies, high-tech companies, people building new things. It's a very, very wide scope. So talk to us. The last claim I did, I spoke to someone on a webinar, contacted me straight afterwards. 4 days later, we put in his claim because his year end was the 30th of June, and we got a £37,800 claim for him. So he thought it was the best thing that ever happened to him. So you imagine how many sales you'd have to make £38,000 profit. It's a huge potential cash bonus. Again, when we look at all the different types of funding, again, I've put up the confused thing. You shouldn't be, because you've got people like us to help you. So that's just a tiny amount of the different types of funding you could think about. There's a lot of sort of horses for courses mentality here. Different types of things you want to spend the money on will require different types of funding. So Andy will cover some of that with the Midlands Engine Investment Fund, and so will Patrick with startup loans. So I'm just going to cover the 4 basic types of funding and then hand over to Patrick. So what we call bootstrapping, which is really getting yourself started, kick-starting your own business. So this might be, putting in a few quid of your own money, possibly your redundancy money if you've been made redundant. Using your credit cards. I remember when I first started my business, I maxed out all of my credit cards and almost got into trouble. The classic standby of friends and family, people buying products off you because they feel sorry for you. Formal family loans, and as I mentioned, grants. Do look at the grants, particularly when you're starting out. There's lots and lots of things like the Prince's Trust, New Enterprise Allowance. Again, talk to the growth hubs. They've got great knowledge of these, and they'll also know the ones that are very regional. So you might find local benefactors and philanthropists who put money aside to help startups. They might match fund. In some regions, FSE Group do grant funding. They don't in the Midlands, but go to your local growth hub. They'll be the real experts, particularly on the regional grants. Now, with debt finance, this is where you're borrowing money and therefore normally have to pay it back, obviously. So most people, I think in the UK, it's 80% of SMEs go to the bank as their first choice for finance. In the States, that number is 25%. So we've then got, Patrick's going to talk about startup loans in a minute. So things like merchant cash advances. If you use debit and credit card terminals, you can actually borrow money on the strength of your future takings of those. Look at joining a credit union as an individual, because if you've got to put money into your own business, the credit union is a great way to borrow that money. And you'll also meet a lot of other businesses there. A lot of people aren't aware you can do crowdfunding for debt as well as for shares. So talk to us about that if you want. You've got things like peer-to-peer lending, which is people like Funding Circle. And then finally, asset-based lending, where you're going to be using the asset itself as security. So a classic is things like car leasing, equipment leasing if you're buying heavy plant, machinery, IT equipment, etc. Moving into equity, this is quite simply where you're offering shares in your business. People say giving away shares. Well, you shouldn't ever be giving them away. You should be selling them for the investment. So Business Angels is a classic case. I'm a business angel. I'm a member of the UK Business Angels Association. I work with lots of syndicates of angels. Crowdfunding is a classic way of raising equity. It's still going on. People think all this has stopped, but it's not. Business incubators. I work with NatWest with their incubators. I work with 5 University with their incubator hubs. So there's lots of them around. And some of those will take a stake in your business, or they will have advisors there that will take a stake in your business. Venture capital companies tend to come in at the higher levels, in the sort of £1-2 million plus, but they are still around and they do put big amounts of money in. And don't forget to talk to your accountant, even your lawyer, because they will have high net worth individuals as clients. And these are often the sort of business angels that want to invest in small companies. I mentioned SEIS and EIS recently. Again, I won't bother with the detail, but they are 2 incredibly good tax schemes for investors. With the SEIS scheme, the investor can claim back 50% of their investment against tax, and with the other one, it's 30%. They can also claim it against capital gains tax and inheritance tax if they're very clever. So most investors don't want to put money in unless you have got those schemes running. And finally, a plethora of other finance. Invoice finance is something you should look at if you've got particularly clients with good reputations. I've mentioned R&D tax credits. I've mentioned grants, particularly the regional ones. Go to the growth hubs. It's astonishing how different you can find grants are. Even national grant schemes like Manufacturing for Growth, which has been going a long, long time. When I've spoken to them, I find I can get a grant for a client in one postcode area and not in another, even in the same county. So your growth hubs will know all the regional elements to that. And then don't ever forget about bartering your services. Classic thing when you're networking with people, suggest your accountant that his website could do with some sprucing up and do enough work to pay your accounting bill. So just think about all of that whole economy of bartering, for want of a better word, exchanging your services for somebody else's. Now over to Patrick, who's going to talk about the Startup Loan Scheme and planning.
Thanks, Tony. Comprehensive as ever, shedding clarity where mystery and confusion sometimes reigns, or actually where mystery and confusion does reign. Firstly from me, just a quick advance apology. My cockapoo called Susie is lying by my side. She's absolutely bonkers. So if she goes bonkers, I do apologise. So I'm going to talk for about 10 minutes about startup loans and why I think planning is a really important thing to be doing for your business. I won't go through reading all the slides. There's a lot of information, as I think Tony said earlier. There's copies available of the slides. I'll ping some web links in the chat when I finish speaking about both business planning and startup loans, and just give us a shout if you want to have a conversation about any of the stuff that Andy, myself, or Tony mentioned. So, government startup loan scheme. It's a really good scheme for those who fit with the scheme. Like all funding, there are specific things you need to do. There are specific exclusions. But fundamentally, it's a scheme designed to help businesses get going, or it doesn't even have to be a registered business. If you've got a business idea, it helps you get it going, and it applies to businesses that are up to 24 months old, or more precisely, businesses that have been transacting for 24 months or less. Simple stuff, UK residency, got to be 18 or over. It's a personal loan for business purposes. So you can borrow up to £25,000 per person as an unsecured loan. But like all loans, and specifically with unsecured loans, there are hurdles to jump over, hoops to jump through, and just reiterating what Tony said about getting your credit score checked out. I think you mentioned Clear Score and Credit Karma, Experian, those sorts of guys. I seem to remember, Tony. And here are the sort of the guts of the scheme. As I said, you can borrow as little as £500 up to £25,000 per person, 6% interest rate over 5 years normally. There's no penalties for repaying early, and they are offering at the moment some capital repayment holidays to mitigate against the COVID-19 situation. I won't go into this slide particularly, apart from to talk about the last 2 points on here. The support element of the Startup Loan Programme is absolutely fundamental. So both Tony and I and a colleague Mark, who works in our business, are advisors on the programme. Our job is to handrail you through it if you're an applicant. I always use the phrase, we don't do it for you, but we help you get it done. Some people think that when they apply for funding, it's a case of filling an application form and either they get a yes or a no. But like with all funding, and I think Andy will go into this in a bit more detail, it's partly about the way you present your case, how you articulate yourself, what your plans are like, how competent you are, and how you're going to measure success. And within the scheme, there are some fundamental bits of paper. You have to submit a business plan where we can let you have the templates for that, and a simple 1 year cash flow. The other thing about the business, about the Startup Loan Programme, is that it does work in harness with other schemes such as the Bounce Back Loan. And I think, if you want to know more about how they can work together, probably Tony or possibly Andy, but probably Tony's the man to speak to. So thanks for that, Tony. Can you move the slide on? Now a little hobby horse thing of mine, which is about business planning. Tony mentioned it earlier. Andy will, I'm sure, mention it afterwards. So I feel a little bit like the guy who sit between the two experts in this webinar, getting a bit of a pincer movement. But my experience of working in businesses and working with businesses has educated me and told me how important planning is. And I won't insult your intelligence by talking about, if you get into your car, would you set off without knowing where you're going? Or if you're going on holiday, would you just pull up at the airport and get on a plane, not know where you're going? But cliches are true, and it is the truth that it's important to have a plan. So I work for two businesses. I worked for $10 million turnover, typical SME, owner-managed business. And more recently, I've helped get some funding for a £50 million worth of funding for a tech startup, both of whom were run by guys who didn't believe in planning fundamentally. They used planning only for a particular purpose, i.e. to get funding. But the problem with that is that their staff particularly didn't really understand where the business was going, how they were going to get there, and where they fitted in. So if your staff don't know where you're going, how on earth are you going to get there? So if for no other reason, communicating a plan is really important. But I don't care what sort of plan it is. It doesn't matter what it looks like, what it's written on, as long as it's written down, it's timed, it's thought through. And as I think Andy will mention later, you've got to be over the numbers. You've got to know your numbers in the plan. But I think with a lot of businesses, there's a cynicism around planning. We've got an online planning tool that overcomes some of those mental obstacles to doing planning, because it sits online. You can create various versions of your plan. And I use the example of my business history, where we were a relatively small SME, turning over $10 million. And we used to do lots of work for very big breweries like Heineken, Anheuser-Busch, those sorts of guys. And you'd sit in front of the chief procurement officer of those businesses, and they would ask you for your business plan. And the only thing I knew when that question came was, well, it's two things actually. I knew they were interested in doing business with us, so that's a really good thing. But I also knew that for the next 2 weeks, I'd be scrabbling around trying to create this weird document that I didn't know how to produce, so I could present it back to them. So what I say to people these days is, wouldn't it be great if you had an online planning tool where you can output a one-page pitch or a version of a business plan and present it to a potential supplier or a potential customer, and effectively say to them, we're right on the ball with all this stuff. We know where we're going. Do you want to go there with us? And it's an incredibly powerful sales tool, if nothing else, but it's also a really great tool for running your business. Next slide, please, Tony. Thanks for that.
So wait, Patrick, I'm clicking.
Or I'll stick with this slide, it's fine. So
there's a delay for some reason.
As I said earlier, I think one of the important things about planning your business is not just writing a business plan, but being able to plan. So the online business planning tool that we've got, and there are, as they say on TV, there are others available. It enables you to help run your business. So there's a dashboard. It imports data from Xero and QuickBooks, and you can use it with your accountant, with your other collaborators, to actually help run your business. You can invite other people onto the platform, and you can do all the measurables that somebody like Andy would require if you do go out for funding. So make sure it's written, it's discussed, and the reassurance of having a plan is amazing. The reassurance of having a plan and articulating it in some form is fantastic. That public declaration can change a business from being a fiefdom or just a lifestyle business into the business being an entity by itself. And the most important thing about planning your business is being persistent and consistent. We do lots of planning for lots of people. We have the full bag of mashings, we call it Planet, which is a complete online business planning tool. And at the other end of the scale, I can send you a vision document that just helps you articulate your vision and your thoughts on the business. A very simple business plan template that will just take you through with all the questions you need to answer. And hey presto, you end up with a written business plan at the end of it. alongside a 1-year cash flow. If you need any help with any stuff, I'll stick some links in the chat in a minute, and you could just give us a shout if you need to talk about any of the issues or any of the things I've discussed. And finally, business planning. It is about an investment of time. It's about thinking it through and looking at how you're going to measure the results, the return on your investment. Treat it like any other purchase in your business. Put fuel in it and use it. And you don't have to believe me, but just give it a go. We'll send you the templates, and say give us a call if you need some more information. I think I'm now handing over to you, Andy.
Thanks, Patrick. I think it's really important that owner managers, SMEs, understand the relationship between growth and profits and cash. Before working for the FSC Group, I was with Lloyds Bank 35 years and spent a lot of those years looking after SMEs and leading teams that did that. And one of the challenges that we faced in trying to support businesses in the SME kind of category was the understanding of cash and profits and how to best fund that working capital. You know, we're in a position where we're trying to get back in, emerge from lockdown and get into a growth phase, aren't we? And there's various challenges around deferred liabilities with things like staff costs and the furlough scheme tapering off, and potentially rent or mortgage deferments. And as we get back into a full working capital cycle with sales recovering, it's important to try and verify as best you can your supply chain and also your customer base and their ability to, or their solvency, if you like. And it's timely, isn't it, to probably take a good look at managing your overheads and how you can best mitigate those. And I fully endorse what Tony and Patrick have said about planning. In the FSC Group, in looking at the Midlands Engine Investment Fund, we get very forensic on looking at cash flow, profit and loss, and balance sheet integrated for 3 years. And it's really important to go through the thought process. I've not seen in all of those years of working for Lloyds a plan go to plan, but it does demonstrate that thought process, and it also enables you or us to sensitize what happens if this level of sales isn't achieved, what happens if these receipts don't come in, these overheads increase, margins, etc. It's all about the ability to service debt potentially, isn't it? So I think that's a really important slide. However simple it is, understanding that relationship is important. Thanks, Tony. And I think just getting a reality check on where you are on this scale between that bootstrapping and funding your business yourself through either retained profits or using banks, overdrafts, or invoice financing. And then if where we come in is above bank funding and below equity in terms of Midlands Engine Investment Fund debt. And as you kind of go up this scale, the cost of funds rises, of course, generally speaking, because if you're using personal loans, they're more expensive than commercial bank loans, would probably be the exception to that. So the next slide, please, Tony. Interesting, and I think it's key that you kind of understand where you and your business fit on this scale, because the price of funds from an equity point of view means that you've got to dilute your own ownership of that business. And then on the left-hand side, you look at sort of costs of debt from a Midlands Engine point of view, where we look at the cost of funds of base plus 10 to 15%. But of course, we don't look to fund businesses that can secure bank debt. So again, these things are all relative, and where banks will be looking for solid profitability in previous financial years to demonstrate serviceability of future debt, provided there's a growth story and forecast which speak to the ability to service debt. The MEIF will take that into account, where banks, if you can't demonstrate it historically, are unlikely to lend in the future. So factor in the cost of debt. It's kind of compare apples with apples, not apples with pears. Expensive compared to what? Thank you, Tony. So this is the Midlands Engine Investment family, as I would call it, to equity funds. We'll start on the left-hand side and work our way across. Now, our paymasters are the British Business Bank, and they have corralled this this pot of money, 250 million quid, across the wider Midlands geography to support businesses who fit the criteria of what these funds are designed to do. And the British Business Bank have appointed fund managers to deploy these funds, £250 million over 3.5 years. And on the left-hand side, proof of concept pretty much does what it says on the tin. If you're an SME looking to establish itself, and there are significant costs to prove the concept, but when you've proven the concept, the impact for revenues will be significant. Well, Mercia are a fund manager that look after the proof of concept fund. BCRS look after, in the West, the small business loan fund, and we, the FSE group, look after debt finance in the West for if that quantum of debt is right for your business. And then Midven look after the equity finance. I'd say about this is that it has to be right for your business. So we're about debt and equity. So I think the main differentiator with debt and equity, if your business is performing at a level where you can see that you can service a debt, why would you dilute your share of your business to give away equity? That would just make no sense. But if your business isn't generating the revenues, but you need funds to kind of get your business into a real growth phase, you might need to concede some equity for that investment, but you haven't got debt to service. So that's the crossover or the decision point, whether debt is appropriate or equity is appropriate. And it, generally speaking, is either early stage or it's a business wanting to get into a huge growth phase where equity is the right call. Thank you, Tony. This is in the slide deck, but if you go into meif.co.uk, all of the fund managers and all of these are explained. So I'm going to talk a bit about our debt fund, and because it is ERDF and EIB and LEP originated funds, the raison d'etre of the funds is to fuel growth and jobs. And so around this wheel you can see that the main purposes of funding are for new equipment, marketing, premises costs, new people, product development, new markets, exporting. No, that's not an exhaustive list, but it's pretty much, the main drive of what the fund is about is growth and jobs, and that captures most of it. It's not, as the box says on the right-hand side, about funding existing expenditure or rescheduling debt or thinking about buying other businesses or MBOs or MBIs. It's not about working capital. That's something to be considered separately, as we've mentioned. And it's not about bailing businesses out that are in difficulty. So that's this is what it's for, this is what it's not for slide. And that sort of eligibility criteria is something that we look at closely. Thank you, Tony. So here's some of the terms that we apply to the debt fund. So typically our interest rate is between 10 and 15% over base. Base is 0.1% at the moment, as you know. Arrangement fee charges 2.5% of the quantum of debt, and we'll look for an amortization period of between 3 and 5 years. and we're quite liberal in terms of offering up to a 6-month capital repayment holiday if your financials suggest that that's what's needed. We do ask for security in the form of a debenture, but more often than not that will rank behind the senior provider, so either a bank or an invoice finance provider. And then we will ask for an unsupported personal guarantee. And the proportion will depend on how we see the risk. We won't ask for supporting security, like, for example, a second charge over your residential house, like a lot of banks will. And we will look for key person cover and for you to suspend or postpone, rather, your director's loans. So it's a security package which often, for businesses going to banks, they can't get to what they call the lending value for a bank to put that in place. So that gives you an idea of the likely terms that we charge the cost of funds for the MAF debt fund. Thank you, Tony. So we are CBILS accredited. We use CBILS up to 250,000, so between 100 and 250. But really, the deployment, what we're trying to use CBILS for is transition to growth. So a business wants to transition, but also has a growth idea as well, a growth plan. And that's what we're deploying our CBILS for. And the key thing, if you are considering CBILS, I mean, it's been well trailed, but there's still businesses that are applying for CBILS loans. You need to start the application process with a fund manager by the end of September. I'm not sure that they being British Business Bank, will have an appetite to extend it beyond that date. I've certainly not heard anything to suggest that they will. You need to start the registration process or the application by the 30th of September. Thanks, Tony. And that slide just details some of our CBILS terms. It's cheaper than our regular MEIF fund because the FSC group gets a 80% guarantee from the government. So it's so why wouldn't it be cheaper? I'd just say, and I might have said this already, but if you can secure your funding from your bank, we would encourage you to do that. Why would you want to borrow money from us at higher rates than the bank will offer it to you? But if you can't secure it from your bank for those two main reasons, serviceability are based on historic financial accounts, and two, you can't get the security package, but you have a good growth story, then our fund might be right for you. Thank you, Tony. We've kind of covered this a bit really already, and the points are there to consider in terms of considering debt finance. So we'll move on from that slide, Tony, and we're looking for these things, and some of them are quite obvious, but there's lots of businesses that don't portray themselves in a way that demonstrate that committed management team. When it comes to assessing management teams, I use a simple structure, and that's vision, plan, competence, and measurement. So have the leaders of the business got a vision for where the business is going? Have they got a plan that sits below that sort of demonstrates how they're going to deliver that? Have they got the competence within the business to deliver it? It's all very well having a big goal, but if you haven't got the competence to deliver the plan, then you're going to struggle. And then how are you going to measure? How are you going to measure the success of how you're progressing against your plan? And a business that's presenting itself in that way, when you think about presenting yourself to stakeholders, be it shareholders, be it funders, investors, the outside world, it's important to professionalize that process if indeed you're needing engagement from those funders or those stakeholders, should I say. So a clear explanation and understanding of what the product or service does, and really gain clarity on that, and how it will generate revenue. Clearly, we want to understand your competitive edge and your USP, your place in the market. And one of the key aspects of considering applications from SMEs is this is this next bullet, which is around getting 3 years forecast. That's cash flow, P&L, balance sheet integrated, so they follow one another. They're fully integrated. The cash flow links into the P&L, links into the movements in the balance sheet, and if that's something that's you're looking for funding for, or rather you're looking for funding, and that's something you're challenged with, then please engage the support of either the Growth Hub or your accountant. Get some professional help, because those financial accounts or forecasts are really key to the process of demonstrating that you can service debt. And so, what are the jobs? What is the growth in jobs that you're also going to create within the Midlands region? How are you going to use those funds? And this is, thank you, Tony. This is the typical timescale, between 6 and 8 weeks from talking with us to advancing funds. And the key to this process, or to this timescale, is that earlier point around getting really good quality management information that you can articulate and demonstrate why you need the funding you do, the impact it will have on your business, and how it will service the debt over a certain period of time. And that's absolutely key. So hopefully that's of some use to you, to understand that there are funds out there that can help you. We're really keen to deploy this debt to SMEs across the Midlands. So talk to us if you think that it might be right for you. And that's my details. Thank you.
Okay, thanks very much, Andy, and thanks, Patrick, for the bit before that. Melissa, do you have any questions? I'm going to go back to the previous slide right at the end, and we'll have a quick thing about the future of funding. But any questions that people want to ask that you're aware of?
Yeah, so the one that I think was already answered manually, but people are keen to hear the answer. So the question from Phil Wood: if you had a bounce back loan and are concerned about the answer you gave to the question, were you insolvent at 31st of the 12th? Can you now apply for a new CBILS loan without that question being asked, to replace the BBL, so the bounce back loan, and avoid any potential problems if the company subsequently fails?
Yeah, I did actually ask him to email me a bit more detail, and I'll answer it offline. But in general, what I was keen to know is, why does he want to replace the bounce back loan? Was it purely there was a concern about that question being answered and therefore being some consequences, or did he actually need more money? I think I'd have two slightly different answers. I've got two ways of answering the first question, and I'll just set straight off the top. The whole of the bounce back loan is what they call self-certified. The bank do not check a lot of the information. In a lot of cases, they cannot check the information. So, for example, if they were looking at your turnover or your profit, you don't file profit and loss accounts as a company, so the bank can't go and check it. So I wouldn't worry too much about how you answered that question, because I think it would be quite easy to say it was a very strange question, didn't quite understand it. And then guess what? They even removed it later, because it must have caused so many problems to other people. The hard-nosed part of me says, well, it is a legal document you've effectively signed. If you've knowingly said something on there that is not correct, then technically you could be liable. But I think in practical terms, as you've seen with the 1.4 million applications going on, the banks have been completely swamped. And I think a simple error of judgment on answering a question like that is probably unlikely to get any serious follow through, but it is technically possible. The bank, don't forget, people have been looking at all sorts of strange things to do with bounce back loans and CBILS, but they still come under the Standard Companies Acts. So if a bank believes that the directors of a company have willingly misled the bank, then they can pursue the directors individually. Forget about the government guarantee. But on the other hand, the banks do have that sort of comfort blanket of the government guarantee. So the general consensus is they're not going to be chasing around too much. I think what they're more concerned about, a bit like HMRC came out with yesterday with the job retention scheme, they reckon there's been about 3.5 billion of either fraud or genuine error. Now, I'm not quite sure they know the difference between the two, but I think the bank will be much more concerned about genuine fraud going on, where there always is in these things. Some clever person is, hacking into people's company's house accounts and using their account details or something, and siphoning off lots and lots of bounce back loans or Sybil's loans. That's more likely to concern everybody than a simple misunderstanding of the question. So that's my long answer.
Okay, no, thank you, Tony. So got another question. Are any sectors excluded from any funding?
So I'll give an answer to that from a MEIF point of view. The fund is there to generate growth and jobs. So but it's not looking to pursue every sector or support every sector. So property, for example, is a sector that the MEIF isn't designed to fund, and also high street retail isn't a sector that we're looking to fund either. Online retail, yes. High street retail, no. And then there are certain other peripheral sectors, ones that are a little bit more unusual or high risk. So, for example, arms manufacturing, that isn't a sector that we support. So, really, property and high street retail are the two main ones, and the vast majority are.
Patrick, do you want to talk about startup loans?
Yeah, just quickly on startup loan. So property is an interesting one for the startup loan. Not designed to help you buy a property or trade property. So if you're a property investment company or buying and selling, flipping properties, no. Yet if you've got a business that operates within a property and you are fitting out that property to pursue the cause of the business, shop fitting, all that sort of stuff, absolutely yes. And the other area with the startup loans is that, broadly speaking, if you're involved with money brokering, investments, those sorts of things, you probably not. There are exceptions, but broadly speaking, not in scope for the loan.
Yeah, very simple thing to add to that one with the property, just because I got a loan approved yesterday. A couple who want to take a lease on a shop for their business, and there was a £60,000 premium on the lease, and I managed to get them a £50,000 loan to cover that. So that sort of property acquisition, in inverted commas, is allowed if it's for your business. And oddly enough, if you are involved in commercial property renting, it is eligible. If it's personal, residential, it's not. There are some strange anomalies. Again, one we only found out only came in at the end of July, was anything that's FCA regulated is just forbidden. So very strange. But generally, particularly with the startup loan, pretty much every sector, other than things you would expect, I think, as Andy sort of covered there, anything that's illegal, immoral, whatever. Well, that's quite a wide definition for some people. But yeah, the best thing is just ask before you apply, because there is quite a thick rule book, and we can just check very, very quickly. Well, we'll know most of them, obviously, but if it's something esoteric or unusual, we'll be able to check quite quickly for you, and I'm sure Andy could do the same.
Great, thank you. And just one last question. How much advice do you give around the application process?
So just say again, how much?
Advice?
Well, I think, as Patrick said in his bit, with the startup loans, our job is to actually help you through the whole process. It's to help you, not to do it for you. But no, there's an answer. So we will give as much help as you need, but we're not there to spoon feed you. We're there to help you. If you think you're going to sit back and let us do the work for you, your application won't go very far. But if you genuinely need, some people find these things very easy to complete. Other people, they're a complete struggle. So I've done Zoom calls with people where I've almost talked them through every question, every line on the forecast, because they genuinely have never done one before. are not familiar with using Excel or Word, but they are the exceptions. Most people have a stab at it, send it to us, and then we help them to sort of polish it and then submit it. So Andy.
Same answer, really, Tony. As much as you need, but it's guidance. It's not doing.
Great. Thank you very much for those answers, everybody. And also just from us, from the Growth Hub, thank you so much for that presentation. I think it's something that all businesses, like businesses in Staffordshire, need to learn about if they don't know already, or just understand a little bit more about what help is out there. So thank you so much for running that webinar. If I could kindly pass over to Becky Parker, who is my colleague at the Growth Hub. She'll just give you a bit of an overview about what we do.
Thanks, Melissa. Yeah, agreed. That was a very comprehensive insight into what funding and funding support is available to Staffordshire SMEs, or for people that are thinking about setting up. Also, thanks, Tony. You did a particularly good job of plugging the Growth Hub, I must say. So no pressure. I think I should perhaps gloss over a little bit about the Growth Hub and give people a bit of an overview as to how we can support an SME in Staffordshire. So the Growth Hub then, so my name's Becky Parker, business advisor for the Stoke-on-Trent and Staffordshire Growth Hub. I also manage the business support helpline for the county. Now the Growth Hub is a relationship, it's a business support organisation set up by the Local Enterprise Partnership, or otherwise known as the LEP for participants that are not familiar with that. If you actively trade or intend on setting up a business within the LEP area, naturally you would fall to us as a Growth Hub for fully funded business support. So we partner with over 150 partners in Stoke-on-Trent and Staffordshire for funded business support, 18 of which roughly are funding and finance, so the likes of Midlands Engine Investment Fund, the startup loans companies, and so on and so forth. But we're also linked to all the local authorities so that we can do some eligibility checks and help you understand whether you qualify for ERDF grant funding schemes. And so on. So I would urge any business, no matter where you are in that journey, or if your intention is to grow, expand, purchase CapEx, to take on new staff, to maybe link in with us. Again, it's a fully funded service, but to understand really what support is available, whether there's any funding for that, whether there's any funding for new employee kit and equipment, all those kinds of things. I would say, sort of getting either through the help or have a one-to-one with one of us as a business advisor. Aside of funding and finance, just to give you an idea, then some of the other partners, so it may be that you're looking for some business mentoring free of charge. It may be marketing advice, HR advice. It may be that we could place an intern or a graduate into the business. And again, all of this support is fully funded. So, please go ahead and make contact and arrange a one-to-one with a business advisor. Aside of the generic business advisors, if you like, we have a small team of specialists. We have a funding and finance specialist advisor, Matt Huswick. We have a high growth specialist advisor that's currently working through the Oxford Innovation Growth Mapper tool, so we can engage with you over that on a very specialist level about your growth strategy. We have a marketing specialist and a HR specialist. HR can talk to you about the self-employment and job retention schemes and so on. So again, if you either just want to engage as a general overview or from a specialist point of view, please come back to me and let me know. Like I say, I manage the business support helpline. I have a contact number in the chat box, but just to reiterate that, the business helpline number operates Monday to Friday, 9 till 5, and it's managed by myself. So there's always just one central point of contact, and that's 0300 418 800. Colleague Melissa does a very good job of sending out communications to Staffordshire businesses. So she's responsible for the weekly newsletters and also some webinar bulletins and so on. So if you're not already subscribed, then we can pop a link into the chat before we leave, and you can subscribe and keep on top of the newsletter. Tony mentioned the Kickstart scheme, so I'm just going to gloss over that as well for anybody that isn't aware. The Chancellor announced a further pot of funding. I think it was 20 million was being distributed to Growth Hub throughout the UK. I can confirm we've had our allocation, so 872,000 has been allocated to Staffordshire businesses. So we've divvied this into, if you like, two separate pots. It's either kickstarting tourism, so it's a business that works within, say, leisure, hospitality, tourism, those kinds of sectors, and relies on bringing people into Staffordshire, but has been hit as a result of COVID. They can potentially apply for up to 3,000 in funding to support things like new tech, so laptops, telephony, PCs, all those kinds of things, EPOS payment systems. And also the other pot of funding, if you like, is for anybody that can evidence they trade 100% business to business. So manufacturers, engineering companies, people that don't have a consumer split with their revenue. So if you fit either one of those remits, then you would apply directly. It's all a web-based application through Staffordshire County Council's website, or we can provide you with the links of how to apply and also the guidance notes. So that will tell you as a sector who can apply, and also sort of guidance on what you can and can't use the funding for. So again, my details are in the chat facility, and I think Melissa may have a slide with our contact details on, so we'll pop that up as well. But yeah, that's it from me really. Thank you all very much. And if anybody wants to make contact with us directly and arrange a one-to-one or have a discussion about any potential funding, then please let us know. Thank you.
Thanks very much, Becky. Thank you again to the FSC and Smorgasbord for running this webinar for us. Like Becky said, it was really comprehensive, really insightful for businesses to learn about. So thank you all to the attendees for coming as well. This webinar is being recorded, so if you do want to share it amongst your network, when it is live on our website, I will pop that in one of our Growth Hub newsletters, and you can be directed to the website to visit it again. So thank you all very much.
Thank you.
Thank you. Bye-bye.
Thanks, everyone. Have a great afternoon. Thanks again for hosting us, Melissa and Becky.
Not a problem. Thank you for joining us.
Our pleasure. And thanks, everyone, for joining in on the call.
Right.
Take care.
Bye.